Jason Brady is the president and CEO of Thornburg Investment Management. Jason, it's good to have you. And should investors be positioning for the taper? And if so, does that mean continued difficult investing in things like value and banks and rate-sensitive sectors and oil and China?
Look, I think you've hit the nail on the head in the context of what's been driving markets, which is really, with fear of a Fed tapering. In 2013, we saw this play out, and we had the sort of fear of the beard of Ben Bernanke. Powell's clean-shaven, so I think it's going to be a little bit less worrisome for investors, as you point out. What the Fed should do and what they will do might be different for a lot of investors, but I do think the Fed will taper. There will be volatility, but ultimately, remember, they're tapering because the market and the economy are improving. And though the data was a little less good recently, it was really more that its rate of improvement was slowing versus, in fact, that things were getting much worse.
So let's just focus on investors here for a moment, because, again, the taper plays should be the kind of plays that suggest handoff from Fed-supported economy to one with its own momentum. And the whole point was to be in the reopening plays, the value plays, the banks, the rising interest rates. None of those trades are working. They haven't been working all summer. They really kind of peaked in late spring. So what do you say to somebody who might be overweight the banks right now, or energy, obviously, or other cyclical names? We just talked about Deere's declines.
Sure. So obviously, each individual name is different and the sectors are different. I actually think that financials are more attractive, and certain parts of the financials are more attractive than, say, energy. But within the sort of overall value or cyclical uptick, I think what you just saw really was the stocks get ahead of themselves a little bit. But ultimately, there's significant value in those names as volatility increases, because the cash flow that they generate continues to be significant, and valuations there are notably lower than in some of the growthier names that I think people have rotated into marginally.
So if you hold, and I see that you like JP Morgan, for example, I would almost posit to you the only catalyst I can see is if the Fed delays the taper for being in the financials or for being long bonds or whatever. I'm sure you must feel differently. What do you think are the catalysts for these trades to really start clicking again?
Sure. So there's a few fundamental elements, and then there's obviously sort of how people feel about the sector. Fundamental elements are really just the credit quality of the folks that JP Morgan is lending to, and the overall environment, to include the M&A environment, which is pretty significant. I think when you think about how financials can work more generally, what you think about is a steepening curve. Remember, the Fed is not talking about, or maybe even talking about raising rates. And in fact, I think that there's significant concern about when they might ever do that. Whereas tapering is a different conversation. I think the Fed is getting into the conversation of, hey, why are we continuing to buy MBS when the housing market's super hot? Yeah. Ultimately, the Fed will work with macroprudential legislation, especially with Lael Brainerd, if she's in fact head of the Fed, versus higher rates.
Shepard Smith here. Thanks for watching CNBC on YouTube.